Good morning, everybody, and welcome to NJPAC's Virtual Business Partners Roundtable at Home. This is a series of conversations featuring business leaders, government leaders, and others from throughout the state, speaking on the issues that we care about most. I appreciate your joining us, and I hope everybody at home who is tuned in is safe and healthy, and that your families are also that way. These programs have been a popular part of NJPAC's programming offerings for I don't know, 10 or 12 years. Now that our campus is closed, we've recreated them onto an online setting. And I've discovered that we have been able to visit with many new friends from around the state based on this virtual transmission. Today, I'm looking forward to what I know will be a really useful and interesting conversation about how banks are operating as the key drivers of our economy's recovery from the economic hardships that have been caused by the coronavirus pandemic. I'm delighted to have three panelists with us for this discussion. Linda Bowden, who is New Jersey Region President of PNC Bank and the celebrator of, I think, your 29th birthday yesterday. So congratulations, Linda. That makes you the youngest major bank president in the United States. Maybe later you'll tell us how you did it. Look at you look great. Yeah.
29.
Exactly, right. Michael Carbone, who is the regional president, Metro Pennsylvania and New Jersey market for TD Bank, and Doug Kennedy, who is the president and CEO of Peapack-Gladstone Bank. We offer thanks to our series sponsor, PNC, for making these events possible, and to our friend Joel Sherman of Atlantic Tomorrow's office, who is the very engaged chair of our Business Partners Committee. So just to remind you of our timing this morning, this is a 45-minute session, half hour of questions moderated by me with our panelists, and then we'll have 15 minutes of questions from you. If you would like to ask our panelists a question, you can do that at any time by typing it into the Q&A box. We'll ask the questions we receive from you at the end of our conversation. And you can find the Q&A box when you hover your cursor at the bottom of your Zoom screen. So let me introduce our panelists. Linda Bowden is the New Jersey Regional President of PNC Bank. She's responsible for providing executive leadership and supporting client relationships and business development initiatives across the firm's lines of business in the region and throughout Greater New York. Linda has extensive industry experience that spans every aspect of wealth management, having served as portfolio manager, trust and investment officer, and as a manager overseeing private banking officers. She has been named among the 25 women to watch by U.S. Banker magazine and was recognized as one of the best 50 women in business and Power 100 by NJBiz. Prior to joining PNC in 2009, Linda was the managing director of Wachovia Wealth Management, and she began her career as a teacher for 7 years in Wyckoff, New Jersey. Linda is active in a range of community programs. She is chairwoman of the New Jersey Chamber of Commerce Board of Directors, serves on the board of the Drumthwacket Foundation, as well as the executive committees of the New Jersey Symphony Orchestra and Choose New Jersey. In addition, we are honored that Linda is a member of the board of NJPAC, and she is among the most active members of our board education committee. Michael Carbone is the regional president of the Metro Pennsylvania, New Jersey market for TD Bank. He oversees all retail and commercial bank services and profit centers, consumer and commercial lending, and government banking within the market. Prior to his current role, Michael was Senior Vice President and Market Manager for the South Jersey and Delaware market. He began his 30-year banking career with First Fidelity Bank and then moved on to United Jersey Bank South. Michael is dedicated to serving the community and has been recognized for his involvement with the Anti-Defamation League, the Cystic Fibrosis Foundation, the Boys and Girls Clubs of Camden County, and the American Red Cross. Douglas Kennedy is the President and Chief Executive Officer of Peapack-Gladstone Bank. Doug leads the company's wealth, lending, and deposit lines of business, along with its branding, human capital operations, and technology functions. In 2018, the bank was recognized by American Banker as a best bank to work for, the only New Jersey bank to receive this honor. He is also a member of Montclair State University's Board of Trustees and the boards of the New Jersey Bankers Association and New Jersey Chamber of Commerce. He was named to the NJBiz Power 100 in 2020. He was appointed to the Board of Directors of the Federal Reserve Bank of New York, the New York Fed, in January 2020. Good timing, Douglas. And we are delighted that Doug and Mike and Linda are here with us today. Welcome, folks.
Yeah.
All right. So let's get started. I'd like to ask you all to comment on one question to begin with. We're starting, seemingly, the market yesterday notwithstanding, to recover from an unprecedented economic crisis. From your perspective, at the crux of the economic engine that fuels our economy, how well do you think the federal government responded to this crisis? What did they do right, and where did they miss the mark? And I'll go Linda, Mike, and Doug.
Okay. Well, thank you, John. And thank you everyone who has tuned in. I might just start by saying that I was surprised. John said there were over 300 people on this call today, and I always worry that people think of banking and kind of their eyes glaze over, but that couldn't be further from the truth, because it is an exciting business, and this is probably the most exciting year that many of us have had in my over 40-year career, that's for sure. So in answer to your question, John, I actually think there were many, many things that were done right. The government did respond very, very quickly, obviously with the CARES Act. And relative to banking, the Payroll Protection Program, PPP, as everyone knows, it was specifically earmarked for those people whose small businesses were impacted by the COVID situation. The tough part of that was we, of course, were the vessel as banks, but the capital and the risk were with the SBA, but we had to push those loans through. And if you think about it, I know PNC as an example, actually administered 75,000 loans, 8,500 here in New Jersey. How do you do that from a technology perspective? We and many other banks had to quickly build a technology platform, and the SBA did as well. Their E-Trans system was simply not equipped to handle that. So there were some fits and starts, there were some very worrisome moments, and most importantly, think of the end user. That's the small business owner who was very scared, very worried about his or her business going under. And so we had that communication and relationship need with them as we were trying to work through these loans. So, overall, I think we got in the first tranche, $350 billion out into the marketplace. In the second tranche, $310 billion. I mean, that's pretty spectacular. I know the NJPAC was the recipient, and it's not just businesses, not-for-profits as well.
Thanks, Linda.
Yes, so very similar to Linda, we did upwards of almost 80,000 of these loans, the PPP loans, and as small a loan as $312 to upwards of $10 million. And I would say what we learned about ourselves in this industry, both big and small banks, is how nimble we could really be when we had to be. We all had to build systems to accommodate this, and we acted as a conduit. But our importance in this role was we were the ones who were responsible for getting these processed and getting them out the door. I would say going forward, the next phase of this is the forgiveness phase, which we're all still learning about. And I think that's the next phase of anxiety for some of the customers. And the best advice I would give our clients right now is the banks, again, will act as a processor for those. They really need to get their guidance from their CPAs and from their lawyers in terms of that next phase of this. And the government just actually signed on to extend it to 24 weeks from the original 8 weeks. But this has been a successful program. There's a lot of stress around the crisis when this initially happened. And as Linda said, from the original CARES package, where many Americans received 1,200 hours initially, and for families, 2,400 hours, I think the government acted pretty quickly on this. And I think the banks all stepped up, regardless of the size of banks. I had done an interview with the Philadelphia Business Journal, and they were pressing me on competition during this time. And I said, clearly, this is not where banks need to be competitive with each other. We need to get these done for all the clients that are in need. So all in all, so far, the program's been pretty good, despite some of the initial clunkiness that took place. Thanks.
Thank you, Doug.
So in terms of the government getting it right, as you mentioned, John, I went on to the Federal Reserve Board in New York on January 1st. And for those of you who are not Fed aficionados, as you know, that when they talk about the government building its balance sheet will ultimately get to $9 trillion, that is not done in Washington, that's done in the New York Fed. So the trading floor where all of that gets executed is right there. And so for me, with an economics background, spending my life in banking and sitting in the front row seat of what sort of is something that would parallel the Great Depression, has been an incredible learning opportunity. And what I can share with all of you is that, you know, in terms of the speed of the response, how comprehensive the response was, and the magnitude of both the fiscal and monetary reaction to try to stave off a total economic collapse has been, you know, very impressive. Having said that, you know, there's a lot of loose ends. You know, when you move with speed, you know, you're bound to leave some stuff behind. You know, I think that, you know, the state and local governments right now are in a shambles financially. They are going to need a round of assistance. I think that's going to be forthcoming. There's industries that are systemically going to sort of hang out there: restaurants, hotels, entertainment, you know, your space. There needs to be some sort of aid that's directed into those verticals. And I also think that, you know, through the passage of time, many jobs are going to be replaced with technology. We will just not return back to where we started from. And I think there's an opportunity for businesses and or the government or some combination to really look at job skills, training, et cetera, to try to, you know, re-educate the workforce to be able to migrate to a different paradigm than what we were operating in.
Right. Talk about your clients for a minute. What did you observe as the biggest hurdles for your clients in participating in PPP? Was it sort of just the chaos of the early days of the pandemic, or were there other barriers for them to participate? What did you observe? And I will ask Mike to start with that.
So I think the biggest obstacle for our clients was just navigating through the application, right? Making sure that they were able to get the application accurate. And the initial stress in this was the back and forth, because there may have been some mistakes that were made in terms of information that they were completing on the application. But as the program matured and as we got into it, we got better at processing them. The customers got better at understanding how to fill in the application the right way, and it really moved quickly. So after the first tranche, we were still processing the loans before the government even acknowledged they were going to do a second round of stimulus. So we were able to catch up and get all the requested apps through by having great communication with our customers and helping them through that process. But that was clearly, in our case, the biggest obstacle.
Right. Anybody else on that, Linda or Doug?
You know, Mike hit the nail on the head. You had the very specific and objective quantitative elements of applications simply not being filled out correctly to the customer. And then of course that application being put at the end of the line, trying to get into the SBA portal. But it really was an enormous emotional quotient. Customers, as I said earlier, were scared. They were nervous. So that's a big element. And the communication was absolutely critical. That's where the whole relationship management process really takes on enormous importance.
Talk to me for a minute about technology. When this thing hit, did you have the technology in place to execute something as massive as PPP? were you each obliged to come up with your own tech solutions? Was there a sort of monolithic one that you all shared? How did that work? Doug?
So the answer was there was really no end-to-end processing that was in the market into E-Tran. And the reason is that, the numbers, when I think it was like the first day that the program was up was the equivalent of what the SBA had processed the year before.
Mm.
And so there was really no need for that kind of technology to be in the hands for the volumes that had to be processed. So I think most of the banks, during the first release of PPP funds, it was sort of an ad hoc, build it as you go. There was technology, I'm sure, for e-sign and documents and so on and so forth, but there was really no end-to-end process that was there. What happened with us is, we had an SBA department, we're preferred lender with 3 people in it. We expanded that, in a moment's notice to 150. We sort of bulldozed our way in the first phase, did 1,400 applications in a couple of weeks, working around the clock. We actually had 2 people from technology work on assembling an end-to-end. When phase 2 came, we were able to do 1,400 applications in the first day.
Wow.
So we were able to solve for it in the second phase. But in the first phase, when this got launched by the government, what they launched was an idea. There was really no program. There were no specifics. No one knew if we even needed a note. And so it was really, it was kind of like ad hoc, and it's kind of like changing a flat tire at 80 miles an hour. That's what was launched in phase 1.
Yeah. Anybody else on that?
Yeah, I would just agree with what Doug said. And what would normally take us 6 months to build a system for this specific program, we basically did in 2 weeks with around the clock just work. So I think we're all in the same boat. And Linda, I apologize if I cut you off, so I'll go.
No, you're absolutely right, Mike. And the other thing I'd add, there was another element out there that was making it more challenging. Many of you might recall Secretary Mnuchin making a nationally that you just go in, your bank's going to have that in just a couple of days, it'll be all set. And I'm seeing my colleagues smiling here. We were all we're just building this technology platform.
Yeah.
How be, but I think, and we too, and I have to say to Mike and Doug, as our banking colleagues, I know both of your banks did a terrific job, and I would say we too, the second tranche, we were ready. All the applications were clean, they were ready to go, and I think for most of us, it was an all hands on deck situation. We were working through the night, many of us working up till midnight. I was scrubbing applications as well. We were all doing that, just to ensure that we were able to get these through and ready for that next tranche.
Mm-hmm.
And John, let me just throw one more point in, is that, all of the thing that you're hearing about all the banks and Linda's comments about this was not a competitive situation. It really was the industry coming together. And, we didn't measure our success in terms of loans or units, which is how bankers typically would talk. We actually celebrated how many jobs that we were saving.
That's great. Mm-hmm.
Motivated our team was that, for our small bank that we saved 52,000 jobs.
Mm.
So, to be able to have that as the metric of success, that's really what was driving us. I can assure you that making loans, what did Michael say, $342, at a rate of 1%, I can guarantee you that loan does not make any money for any institution that did it. Having said that, it may have saved a couple of jobs or a job. And you know what? That was important work that we've ever done in our lives.
Yeah, that is really such an important point to bring out. I mean, certainly I can look at our team here at the Art Center. The PPP loan enabled us to retain full-time staff for a length of time that we never would have otherwise. So we have great gratitude for that. And, our loan actually was through TD. So thank you, Michael. We appreciate you. And Nick and Martin and everybody at TD. So here's a question. How has this experience with PPP changed your relationships with your clients, your business clients, your individual clients? Has it altered how they feel about you and how you feel about them? Have you gotten to know them differently now? And I would ask Michael to start with that.
I would say that we always felt we had strong relationships with our customers, but this was kind of like the chips were down. And there was, as Linda mentioned earlier, tremendous anxiety in our customer base. And I can remember getting plastered with emails and calls, Mike, the money hasn't hit our account yet. The money hasn't hit our account yet.
Yeah, yeah.
And trying to trying to keep everyone calm as we were all learning the process. And this was really trying to keep people at a balanced level and assuring them that when they got their E-Tran number, that the money was going to hit their account at any moment. And tensions came down over time as the money started to flow in. And then our customers kind of worked as our conduits with other customers saying they did a great job, they're going to get it done for you. And the communication was just strong. And I really think our networks became stronger through all this because it brought customers together. And as Linda said, we were all hands on deck. We were training our store managers to do these loans. And we were working the same time. I said, I wonder if all the other banks are working like around the clock. You know, Easter Sunday for us was full bore 15 hours of trying to get these through for our customers. So I have to tell you, I think relationships have strengthened through this. Mm-hmm. And we have to get through the next phase. And I think the banks will be seen far more favorable as opposed to what happened in the crisis of 2008. So,
Linda?
Fun to watch.
Thank you.
You know, Mike makes a good point about the crisis 10 years ago. There was an interesting survey talking about the least popular entities out there, and banks were only ahead of Congress at that point. So we were looking unfavorably. And I too am hoping that from an industry perspective, we really stepped up. And when I say we, I mean the whole industry stepped up and put together an unbelievably effective system in an unbelievably short amount of time. So I think our relationship with our customers, same thing, very strong. We pride ourselves in communication, solution-oriented approach. And yes, there was a time when they were upset with us because the loan hadn't come through yet, but ultimately they all did. And I think, if anything, it reinforces with our customers that it's so important to stay connected to your relationship managers so you're prepared for all contingencies, for all eventualities.
Mm-hmm. Doug, you got something on that, or?
Yeah, so I would say that, you know, for a small bank, you know, and I spent my career in larger institutions, and there's been an arms race around technology and this whole argument around scale and having size and breadth of product, et cetera. When I left a large bank and came to Peapack, I thought that there was a way to marry up both technology and the human dimension. And we did that, I think, very nicely. In addition to standing up the technology, there was another technology that ran on the side of it, which was a ticketing system that we used for another purpose that allowed people to look in and find out exactly where the application was, phone somebody and be able to tell a client, here's where you stand, or it just got done. And that kind of personal touch, along with the speed that you get from technology and marrying it up with the people dimension, we're going to pick up 1,200 new clients through all of this. And we will grow the bank somewhere between probably 15 to 20% when all said and done. Within the last week, we were awarded a $50 million relationship. We've won some other large, very meaningful marquee names in the market. And the feedback is really just what I just said, which is being able to marry up the product, the execution, and the people dimension of it. So I actually feel, you know, from just thinking about, you know, the community bank side, that, you know, this really was an opportunity for community banks to really shine and to show that they continue to be very relevant in the market.
Right. Great. So right now the country is in the midst of a terrible trifecta, right? We have the greatest public health crisis in 100 years. We have the greatest economic crisis since the Great Depression. And in the last few weeks, we are especially mindful of racial inequality, police brutality, and there is a great roiling around the nation among communities of color. So how are you all thinking now about how to ensure that relief programs like PPP and other services that you offer individuals and small businesses reach everybody equitably? And I'll ask Michael to start.
So one of the things we're really proud of is our stance on diversity and inclusion. We've been recognized as a leader in this, not just in banking, but in business. So we don't see this as an additional challenge for us. We've tried and have done the right things in all phases of our organization. So it's a lot of what we've been talking about, John. It's continuing to have great outreach in the communities. Make sure you're listening to your community leaders and make sure you're involved in the communities, regardless of where they're at from a status standpoint. And we believe we do a really good job of that. And I believe all of my colleagues do a really good job of that. And maybe that messaging just needs to be louder and clearer as we go forward, and continuing to listen is the most important thing. And then following up with what we're being told to make sure we're meeting the needs of the community, both from an outreach standpoint, from a lending standpoint, and from a visibility standpoint.
Thank you. Doug?
Yeah, it's, I think at the end of the day, there's a sense that the world has changed. And, there's been so much talk about diversity and inclusion, and it's time really to act. And so I think this is the moment of action right now. I think that history is filled with lots of rhetoric, but not a lot of action. And, I think that, to count on government to solve for this or legislation, I think you just got to sort of take the bull by the horn and move forward and take action. So, I have to tell you that it's been, a moment in time for me personally and professionally to really take stock on, this whole thing on, discrimination, justice, all of that, and to use this as a learning moment. And, there's some steps that I've taken immediately that were tangible and actionable. Bought some computers for children in Newark who are probably going to face remote learning that don't have that capability. We did that. Linda and the good work that she does at the Chamber through their foundation is involved in, on the educational side in minority neighborhoods. And I was happy to contribute to some fundraising that's being done there. And I think that there's a big opportunity. I mentioned one of the gaps that I think is on this whole education. There are going to be so many folks of color that are going to be dislocated through this period. And they don't need a job to be a dishwasher. They need to have the education to become a carpenter or an electrician, something like that, a trade that they can earn a better living and have and be able to provide for their family in a better way. So those are the things that I'm thinking about. It's maybe a week and a half, 2-week conversation that I'm having with myself, but I think this is the time to do something and take action. And I think the business community needs to take a leadership role in that.
Mm-hmm. Linda?
Yeah, I have to agree. We say all the time, it's easy to be a leader when times are good, but we are in an extremely challenging and really unprecedented time. And especially with the events of the past few weeks, we have to step up and make sure we're doing everything. And, we can't lose sight of the fact that, remember, the OCC's Community Reinvestment Act, CRA, regulatory requirements, it assesses constantly the level of support that we as banking entities provide to the LMI community. So while that's the more objective piece, there's got to be a culture in your bank of ensuring that there's listening, there is an inclusion and certainly an element of diversity that makes all people feel welcome. And the last thing I would say is, many of you know Bill Best, who heads up our community development banking team. PNC overall committed nationally to support a PPP capital program specifically among community development financial institutions in our footprint. And I'm very proud to say that actually New Brunswick was among the very first recipients of that funding, but it was specifically targeted to LMI communities.
Thanks. So I'm gonna ask one more question, then we're gonna go to our friends in the universe for theirs. And so my last question to you guys is, as you look into your crystal balls, what is your best guess as to when the economy will truly begin to recover predictably? The unemployment numbers yesterday, I think we added 1.6 million folks to the unemployment roles, and the stock market has been up and down. Do you believe that when the recovery begins, it will arrive as abruptly as the crisis did, or is that too optimistic a take? What's your take? I want to start with Doug on that.
So, that's a great thing. Every one of the weekly board meetings is an update in terms of the economics. And, it is sort of a moving target. But, the thinking right now is that we are at the end of this quarter, we'll be at the bottom.
Mm-hmm.
We are going to feel a very quick rebound. So we're going to feel very good. It's going to feel like, holy cow, this is a V. The problem is it's not going to get to the end. We're probably, the official unemployment is 13.7. The Fed believes it's another 2.5% that's not being counted, 16.5%. We think that unemployment probably gets down to about 10% by year end, which is still sort of the height of the Great Recession that we went through. So that's still a big number. We then will continue to go through all of next year. We'll get down to about a 6% unemployment by the end of 21. And then we'll level out at like somewhere between 4 and 5 by the end of 22. And the folks that are in that unemployment number are not across higher paying jobs, which is what we saw in the Great Recession. It is extremely concentrated at the bottom end of the economic chain, which makes this very problematic. And it also makes, trying to get that recovery fully digested all the more challenging.
Mike? Oh, I'm sorry.
We're 2 to 3 years out.
So I would say, for me, it's when there is complete confidence that there's a vaccine for the health crisis, right? I don't know what the time frame is, but I think that'll give people complete confidence to go back doing normal activities. And we don't know for the hospitality industry what their social distancing rules are going to be until we get to that point. So I don't think we get to a full recovery until we have a full confidence that the health issue is managed and behind us. And I really don't know if we truly understand it even to this point yet. So instead of giving you a time frame, I'll tell you, I think that is the very most important element for us to get back to a more normalized economy. And hopefully the sooner the better. I do agree with Doug that we will see a jump, and as the confidence grows, that jump will go quicker and faster for everyone.
Linda?
Yeah, I agree with my colleagues. I would add a couple of points. I think, interestingly, if you go back to 2008, I think we are all in a very different place than we were then. And so, yes, while the economy has taken an unbelievable hit, while unemployment records are at all-time highs, there are a couple of bright spots. The savings rate, as an example, from an individual perspective, it jumped. It was almost double the previous record in May of 1975. And so that's enormous. Credit card debt is down significantly. So we're in a little bit better shape overall. Certainly the banking industry is much more capitalized, much better capitalized, and much more liquid than we had been. But we have very specific industries, as was said, entertainment, transportation, that are getting clobbered. And these are employers of many, many, many people. So we think, we will see a bump, but recovery is going to take a year or more.
Yeah, I think you're right. I think you're all right. I mean, certainly from where we sit in the live entertainment business, I can't imagine customers coming back pre-pandemic, as Michael said, until there is a vaccine in widespread use so that people feel safe. This will not be true, certainly in other sectors, but to your point, in airlines, in the hotel business, in lots of hospitality oriented businesses, whatever our governors and our mayors say to us about re-entering the water, I think as consumers, we're gonna think about our health first. And so we're gonna lag the instructions we get from our electeds, I think.
And
anyway,
John, if I might reinforce a point that I think Doug made, these industries employ exactly some of the folks we were referring to before, lower income folks, often people of color. And so our worry is that's just going to further widen the gap. So it's another significant leadership challenge and call to action.
Right. So to go back to my earlier question, we think about equity and we think about social justice. When we think about communities of color who are most affected by the pandemic, these communities will, as you're saying, be the last to recover. So we need to be mindful, all of us. All right, so thank you all. We're going to go to questions. My colleague Aisha Irvis has a bunch of good ones. So Aisha, why don't you start, please?
Thank you, John, and good morning to everyone. The first question comes from Christopher Birdyshaw of Millrose Consultants. How are you approaching the retail and hospitality industries in particular, who have been so greatly impacted and will likely have a longer path to recovery? So
let's start with Doug on that, please.
You know, I don't think anyone has a great answer for that, truthfully. I mean, at the end of the day, the ultimate outcome on the financial recovery and success of those industries is really going to be a function of how we as consumers, you know, actually patronize the services and what they do. And if we all, you know, there's this tension right now in the market where small businesses need to open up and conduct business in order to be able to make money. So that's one tension. And a lot of pressure that you hear in the market is coming from that end. And the other is what Mike just mentioned, which is people are cautious. They're afraid that if they get ill, they may die or infect their family members, et cetera. So this tension right now is there. I don't know that's ever going to be resolved until there's a vaccine. The outcome for those industries of what happens is that many of them, unfortunately, are going to disappear, is what's going to happen.
That must be a really hard, these must be really hard decisions that you all are going to be obliged to make as businesses come to you in distress, asking for loans, and you have to really study their business models and understand what their survivability is. There's going to be a lot of analytics and a lot of emotion, I would assume, involved in those conversations. Have you begun to have them already? I hate to jump in, but I'm curious. Linda?
Sure. I mean, we have customers, many of the kinds of industry representation that you're referring to in this question are through our retail outlets, through our branch outlets, and those conversations are starting. And you're right. It's very tricky because on the one hand, we're running a business, but on the other hand, we are very community minded. So it's ensuring that we are in guaranteeing the right balance of those two factions as we try and help rebuild the community. A lot of this is also through community development and some of the things we were talking about earlier.
Great. Let's go, Aisha, please, to the next question.
This question is from Arlene Blackwell, SHUH3 homeowner. What are the banks doing to preserve home ownership and keep neighborhoods intact?
Michael, can you answer that first, please?
Yeah, we are talking with our customers. We've actually on both sides have offered deferments of payments through this time, trying to help the community. It's specifically in the industries that you mentioned earlier, and we want to talk to our customers. We want to know where they're at in the cycle, so we can help them through this, either through a deferment of payment. And we're actually looking at the next round of deferments. Initially, we did them for 3 months, and depending on where you're at in the cycle as an individual or as a business, it may require another deferment. So very difficult time for people right now, and having great conversations is the most important thing to do with them right now. And that's why the next phase of the program, the PPP program, the forgiveness program, is going to be so important to see how these certain businesses are ultimately affected, and then how that trickles down to consumers who are working for these companies so they can continue to pay their mortgages or their rent or whatever it may be. So we have to be, as I think Doug said this earlier, we really have to be listening to what the community is telling us, listening to what our customers are telling us, and work in conjunction with the government to come up with great solutions so people can stay in their houses and people can function the way they should be able to.
Doug, you want to take that?
Well, you know what, Peapack is a community bank, and without a community, we're not a bank. And so for me, one of the things that we did right out of the gate was to reach out proactively to borrowers that we had, both on the individual side and as well the not-for-profit area. All of the LMI areas that we had exposure to, we proactively called, made them aware of the fact that we had the program. We also have done extensions and prepared to do additional extensions if need be. One of the big priorities for me, because this is a health-induced downturn, this is not a financial downturn. Everybody here is just a casualty in what's happened here. And our communities, truthfully, if you don't save the weakest in them, the whole thing will rot from the inside out. So for us, the priority of taking care of the most in need in our community is sort of a top priority for us. It's part of our core principles, and our people are very much proactively laser focused on carrying the weakest with us through this downturn.
Great. Linda, do you want to add, or shall we move on?
I agree with everything that's been said, and we too have engaged in similar programs.
Yeah. Aisha, next, please.
This is from Bobby Singer of geoscapesolar.com. How will your banking facilities support / finance green energy expressions such as solar panel systems, both residentially and commercially?
Linda, you want to start with that?
Yeah, I mean, I can tell you from the PNC perspective, we have and have had, my 11th anniversary here is on Monday, and ever since I've been here, a very strong green focus. We have, I know at one point we had more LEED certified buildings than any bank in the world, not just the country. I don't know if that's still true, but we have a great deal of focus on that. So, we are looking, we think a lot of these businesses are the wave of the future and an indication of where jobs indeed can arise. So, if it makes sense, we're very interested in it.
Thank you, Linda. Aisha, there's a question that I see in the queue from Peter Hansen. Can you ask that question, please? I think it's a timely one.
Darren Walker of the Ford Foundation recently stated that corporations need to revisit the notion on their sole reason for existence is generating profits. He challenged them to rethink capital distribution. What do you think of Darren's challenge?
Let's start there, please, with Michael.
So, it's a great question, but when I look at our organization, the first thing our CEOs came out and said during this pandemic is we are going to be mindful of our employees, so there will be no job loss because of this pandemic, because we have a commitment to our team and our communities to, one, support them. And yes, everybody is in business to have earnings and things like of that nature, but there's a human element to what we do. It's how you build a brand. It's how you build a culture within your organization, and how you take that culture back out to the communities in which you serve. And it's what really makes a great company. If you're solely driven by your bottom line, you're not going to build anything. And we have focused very hard on our brand and our culture and what we mean to the communities which we serve. And Doug and Linda both said this: you can't be in a community if you're not going to support that community. It's not our sole existence is our bottom line. Our sole existence is to make an impact.
Great. Anybody else on that?
I think he's right, by the way. I think he's right in what he said, and I guess it landed on me the same way it did Mike. I feel like we're very engaged in that already. If we were only profit motivated, we wouldn't fund the kinds of foundation commitments that we're engaged in, or the diversity and inclusion work. It's a big part of our culture as well. And maybe there is a selfish motivation, because what we find is when employees are engaged in our particular case, Grow Up Great. I know everyone has a sort of a stake in the ground in terms of what they do in the community. For us, it's children 5 and under. When our employees are engaged in volunteering and contributing to the drives, their employee scores are much higher. Their overall satisfaction level is higher. So it's altruistic, but there's a very strong, more objective motivation.
Thank you. Doug, did you want to weigh in on that?
Yeah, sure. So we're a public company, and this informational, I think, for the now. And sort of asked three questions of myself. Who are we as a company? You know, what, how are we going to operate, and how are we going to grow our business? And the first question of just who are we was specific to that, which is what's our reason for existence? And what I've sort of communicated, I have a weekly call with all of our employees about a month ago. I sort of called this out to the entire company, and that, you know, our meaning of what the work that we do, getting back to, we save 52,000 jobs. That became such an empowering event that going back to, we're here to make money for this quarter because we're a public company, was not a place that we were going to go back to. So I've actually taken a stand and basically said our purpose and our responsibility is first to each other, second is to our clients, and the third to our communities. And so our first and foremost is to help them in any way we can, not just with banking service. We have employees that have had steps mended for elderly clients, to go the extra step and have those actions define who we are as a company. Not that we ground out an 11% return on equity and a 1.25 return on assets. That can't be what we're all about. That's not a company that I want to be part of. And it's not the company that motivates our employees to come to work every day and do the right thing.
That's genuinely inspiring. Thank you for that. We can anybody in any business can learn from that, right? You know, it's your team and it's your community, right? And it's the people we serve. So great stuff to think about. We're past time. I am going to ask one more question, and then we're going to let everybody get back to their lives. Here's my question. The government stepped in very quickly and saved jobs and likely saved lives, you know, with the aid packages that it delivered and that you all facilitated so well. What is your prediction on the future of continued government relief programs? What's next? How long might they last? I'll start with Michael.
So it's really going to depend when there's a confidence of us coming out of this and the economy starting to get back to a more normal aspect. And I'm not sure what the next stimulus. There could be another stimulus for individuals through this. And then there's other programs that are being talked about, the Main Street Lending Program, that we're trying to figure what all that is right now. And I'm sure my colleagues are too. So I can't give you a specific answer to that. I could foresee another round if we think there's going to be another surge in COVID cases and it's going to further impact businesses. My hope is that we start to gain confidence, and as businesses reopen, we don't see a surge in COVID. And I think that would cause less of a need for another stimulus. But I think there's an absolute good chance that the government may pump some more money into this economy, depending on where we go from the pandemic.
Linda?
Yeah, some of us were on a call yesterday with Senator Menendez, and he was talking about sort of the next stage, the phase 3 here. And so I think that's certainly a possibility, but there are variables. One, as Mike said, is, hey, wouldn't it be great if we don't have this surge in the fall? We develop some kind of group immunity and move forward. So if that happens, the need may not be as great. But the other thing is Congress. It's very difficult for Congress to agree on what that next stage should be. So in a nutshell, I think there's a possibility, but time's going to tell.
Mm-hmm. And Doug?
There's been too much of an investment to sort of back away right now. This was a health-induced downturn. And the spirit of everything is to sort of put everything on the table and carry the entire economy on the other side. And the motivation for that is that to allow it to go into shambles, the rebuild would take a decade or more in order for us to come back from. There's zero incentive for anybody to allow this to falter. There's another $1.5 trillion in fiscal stimulus that's going to come, fill in some of the holes. Probably in July is when we're going to see it. Additional relief for people, maybe some targeted to the more difficult industries, some relief there for carrying them, PPP, or there's some other sort of enhanced benefit. And the Federal Reserve has got an unlimited balance sheet. It's going to hit 9 trillion as the projection. It has unlimited capacity to be able to keep on making sure the markets perform and work. So I expect that there's another wave of support. I believe that it will happen. You'll see it in the summer. And then, the rest of how we come back, how we get back to work, how we get normalized, when this vaccine makes it, when all of us can go get a shot, all of that is going to determine, the recovery. But no one's going to back away from this right now, in my view.
Great, thank you for that. So we've come to the end of time. If you were game, I would keep going for a lot longer, because this has been a really useful and interesting conversation. And we're grateful to Michael and Linda and Doug for your time and your wisdom and your expertise. I think we all learned a lot in the last 45, 50 minutes. So thank you, guys. I appreciate everybody joining us this morning. We will come to you all in the next week or so with a final Business Partners Roundtable that we will present at the end of June, and that's going to be how leadership is evolving based on the realities of our health crisis, our financial crisis, and our social justice crisis. And we're going to have 2 leading CEOs talk about that with us. And then I will tell you that in July and August, we'll be having 1 Business Partners event a month. And we will keep you informed as to that. Thank you all for joining us. I hope you all continue to stay safe and well as time goes by, and I appreciate your participation. Godspeed, everybody. Take good care.
Thank you, John.
Yeah, thank you.
Thanks.
Best wishes, Linda.
Thank you, guys. Bye-bye.
Thanks, Linda. Thank you, Doug. Thank you.
Thanks.